Section 121 of the Internal Revenue Code says that if you own a home and you live in it as your principal residence for a minimum of 2 of the last 5 years, that when you sell your home, you have some level of exemption from paying capital gains taxes. Now, I think most people know this, but a lot of people remember way back when you did not pay a gain, you had to invest all of those proceeds into another home within 2 years, or you would pay taxes. That's no longer the case. But the way it works is simply, if you have owned a home for 2 of the last 5 years, and you sell your home and you sell it as an individual filer or a single filer, up to $250,000 in capital gains they're exempt from taxes ever. If you are married or if you file jointly, I think you have to be married and file jointly, then you can exempt or you can exclude up to $500,000 in gains from taxes. Now, why would I bring this up? Well, because some of you listening to this show right now have exceeded the level of excluded gains. So some of you have more than $500,000 as a married couple in gain in the value of your property since you bought it. Some of you as single filers filing individually have more than $250,000 in gain since you purchased your property. Say I'm single, I bought a home for $300,000. It's now worth $600,000. That's $300,000 in gains. Think about it. The first $250,000 for me, because I've lived in my home 2 of the last 5 years, first $250,000 would be excluded from taxes. The final $50,000 in that particular example, had I not had any expenses to use to offset that gain, that last $50,000, I would pay long-term capital gain taxes on it. And so I know, as a home seller, as a homeowner, I dang sure wouldn't want to sell my house thinking that I didn't have to pay Uncle Sam even a penny on the gain of that sale, and then all of a sudden realize when I filed my tax returns, oops, I owe some taxes. Think about this. You live in a home now, you have $200,000 in gains, you want to convert that home to a rental property. Well, when you convert it to a rental property, there's a possibility you're going to have to pay taxes on it. But think about this. The law says you've lived there 2 of the last 5 years. 2 of the last 5 years. So if you move out and you sell that property before it's been more than 2 years since you moved out, or really up to 3 years, then you would be exempt, or you would be able to exclude up to $250,000 or $500,000 in capital gains. Only reason I'm mentioning this on today's show is because I want to make sure that if you're already over the amount of the exclusion, you might want to consider selling your house now, buying another home, because then you get to do the same 2 of the last 5 year period, and you get to exclude up to another $250,000 or $500,000 if you're married filing jointly.